London main market listed Caracal Gold is a gold producer that takes gold out of the ground in the east of Africa. It's technically speaking a penny stock. It trades on the London market with a capitalization of just £10.9 million. Now, it's focused on rapidly increasing its production at its flagship asset, the Kilimapesa gold mine in Kenya, which was previously owned by Goldplate. And in fact, the former chief executive of Goldplate, Gerald Kisby Green, is now part of the Caracal team. Well, let's take a look now in some more detail at this asset with Caracal's chief executive, Robbie McCrae. Robbie, good to catch up with you. Look, this is a really interesting story. And I said at the top, it's a penny stock, and we'll go into the stock price and the stock chart in just a few moments' time. But I want to begin, first of all, if I can, to get a little bit of history about Caracal, what you've put together in terms of the team and what you are trying to achieve.
Thank you, Jeremy. Good afternoon. Yeah, we're building a very strong team within Caracal, and with the management and all the people we've recruited to Kilimapesa. We've got great aspirations to become a significant East African gold producer. We believe Kilimapesa is a wonderful asset, but in order to for it to be brought to full value and to deliver onto our aspirations in East Africa, we've had a strong focus since January on building the team, and we've brought in some I want to call them heavy hitters. Our general manager at Kilimapesa, Rion Lombard, has been involved in the gold mining industry across Africa and in South America for over 2 decades. He's been involved in the exploration, development, and management of some serious gold mining operations. 200,000, 300,000, 400,000 ounce per annum.
No, absolutely. Look, I said you acquired the mine from Goldplate. Why did Goldplate want to offload it, and what did you see in it that Goldplate couldn't achieve?
Goldplate's main focus is their gold recycling business in South Africa and in West Africa. They weren't really miners. We on the other hand are miners. Goldplate didn't want to sink a lot of capital into the exploration of the Kilimapesa asset, and we saw that as the opportunity. Very limited exploration had been done. $20 million of capital had been sunk into developing the mine and the plant, and all we had to do was spend money on the exploration. So we're almost reverse engineering it by doing the exploration last, but that's where we saw the opportunity. We got it for a very good price. A lot of money had been sunk into the infrastructure and development. Had a valid mining license, which is obviously a big step. Getting a project fully permitted takes time and costs money. So we walked into something that was ready to go, and we've spent money on the exploration now.
Yeah, well, let's take a look at the operational side of things and where you go. As I said, you are technically producing gold. I know you have intentions to produce an awful lot more than you are at the moment. But operationally, what's the situation and what's your sort of cost base at the moment in producing gold?
We have an underground and an open cast mining operation, Jeremy. We then have 3 plants. We have a conventional milling CIL plant. We have a tailings retreatment plant, and we commissioned a pilot plant heap leach during the period from January through to April. So we mine underground and open cast, and we produce gold from 3 streams. We're rapidly advancing the heap leach project. We're taking it from currently 15,000 tonne a month, and we're ramping it up to a serious tonnage, which we'll come out and tell the market about very, very soon, which then gets us to this magic number that we've been talking about, the 24,000 ounces a year by the end of the year. Current production costs, all-in sustaining costs, sitting around $1,200, $1,250 an ounce. And in January, we produced just under 1,000 ounces. So we've tested the capacity of the current configuration of the plant. Obviously, at the moment, with all the remedial and optimization work, etc., that we're doing, our production varies month on month, depending on what we're producing. But very importantly, we've got a very clear strategy from now until the end of the year to get to that 24,000 ounces per month. I was on site over the weekend before I came back to London, and I've seen the plan and I've seen the ramped up numbers, and it's good. It's solid. We're going to get there.
Now, clearly at $1,200 to $1,250 cost base and a $1,950 price of gold per ounce, you've got a fair bit of margin in there, but you are only producing 1,000 ounces. When you ramp up to 24,000, which is the intention as you just explained, does the cost come down per ounce?
Yeah, I mean, gold mining is about grade and tons. You treat more tons, and you increase your grade. You make more money, and that's what we focused on doing. So yes, I mean, we'll be producing more ounces. It means our fixed costs are spread across a greater number of ounces, which drives the costs down. But on this, it's a very important point to make. The majority of the ounces with our program are going to come out of this heap leach facility that we're constructing. And heap leach is low capex, low opex. The disadvantage of heap leach is you sacrifice a bit on recovery, but it's low capex, low opex. So yes, we expect that number to come down between now and the end of the year when we get to that magic number of 24,000 ounces a year.
Yeah, let's talk about the project resource as well, if we can, and where you are at the moment and how you intend to expand that if there is expansion potential. Explain more about this JORC resource and how you are intending to go forward with it.
Sure, there was very limited exploration previously at Kilimapesa, as I've already said. They had defined just over 670,000 ounces in the focus where our exploration has been as well on the Kilimapesa Hill. We've subsequently put in over 85 reverse circulation holes into that hill. We've put in over a dozen diamond holes into that hill, and we've come out and told the market that we'll be updating our resource by the end of the second quarter of this year. We're expecting a healthy increase in that resource, not only from growing the ounces, but also growing in the confidence. We expect to move some ounces from inferred up to indicated and from indicated to measured, and grow the ounces substantially in the hill. In our prospectus last year, September, we told the market we believe that there's over 2 million ounces within the greater Kilimapesa license area, and the drill rigs will be moving off the hill very soon, I believe early next week, and they're going to get onto, we've got 7 defined regional targets already, and we're going to start drilling those out. And, if what the smart geologists reported was correct in the prospectus, and what my geologists and Frank, our new mineral resource manager, is telling us on site, we've got a very real chance of getting to that number within the Kilimapesa license area. So exciting times for us on the resource.
Yeah. What's the balance sheet looking like, and how well funded are you to continue to increase costs as per the drilling campaign you want to roll out? As I said, as we've explained, and you've already said, you've got money coming on to the profit and loss anyway, because you are already a producer. How does that balance work out? Are you going to have to come to the market for money, or are you effectively self-funding?
We've been pretty much self-funding to date. I mean, we're funding. We're a small company. We're funding over $300,000 a month worth of exploration costs out of our cash flow. We funded the construction of this pilot plant heap leach out of cash flow. But to build a 24,000 ounce per annum operation, it's going to cost money, and it's a trade-off between how fast do we want to build the mine. So do we want to take an extended period of time and try and do the whole thing out of cash flow, or do we come to the market at some stage to raise the money to get it done? We're investigating options on that. I mean, at our current share price coming out to raise equity, I'm the largest or the second biggest shareholder, and I'm very aware of how dilutionary it can be. So we're looking at options on the funding, but at the moment we are. I mean, we're funding a lot of work from the money that we're making at Kilimapesa.
Yeah, I was talking to clients earlier this morning about this interview, and they were saying that the fact that you did have money in the company, which of course is always an asset, I think, when you are talking about the operations to the company. And of course, shareholder returns are always high in people's minds, and knowing that you've got that interest in the business does actually give some sort of perspective. What we've been talking about, Robbie, of course, has been what's happening in Kenya, but I know that you've also got an asset in Tanzania. What's happening with this, and how does it compare with the Kilimapesa project?
Tanzania is a very well-known gold region. It's the premier destination in East Africa for gold production. So it was important for us to have a look in Tanzania and to see what we could find. We came across what we believe is a really good asset, or assets. We're in the final stages of the acquisition of those assets. When we announce the acquisition, it'll more than double the current resource that we have. So it'll a substantial increase in resource. These assets have had a lot of very good quality work done on them by an African-focused gold major. We announced Resolute owned these assets before. Extensive exploration work, extensive feasibility study work on the mining and the processing side. So there's a clear path to production for these assets. Once we've announced the acquisition, and part of the acquisition announcement will include the work that we plan to do and how we're going to take them from where they are through to production. So it's an exciting acquisition for us. It grows our resource base. It takes us well over 1 million ounces, which is quite a big achievement, we believe, for a company that's only been listed for 7 months. Slightly different jurisdiction, still in East Africa, but in a different country, in a well-known gold-producing country and province. It's an exciting acquisition for us. And we've got the team in place now through our appointments that we've made this year to develop it.
Yeah. Look, I want to take a look at the share price chart as well, if we can, just quickly bring this up, because I want to show what's been happening. Look, the market is in stress mode at the moment. We know that. And we've seen big declines, certainly across tech stocks, but also across those stocks that are still making money. And we're talking here about resource stocks. And like a lot of the market, Caracal has been marked down. I said at the top, you're a penny stock. I think here in London, you've got the stock price moment of 0.67p. What are your, again, going back to this point, you're a shareholder. What's your message to shareholders? And what do you say is being built in here? Clearly, some looking at this and thinking there's a degree of risk to this operation you're running. Just explain more about what you're presenting to investors and how you want to reward investors for investing in the business at 0.67 pence.
Yeah, it's
painful, I'd imagine.
Painful for me and painful for all of our supporters who bought in at higher prices. If a couple of messages. If I was able to buy at the moment, I'd be buying at these levels and increasing my holdings. I think it's a very, very cheap opportunity at the moment. There may have been some confusion in the message originally that's come out from the company. Are we a small explorer? Are we a small producer? We both. We had a resource. We've gone out. We've aggressively explored it. We valued at about a third of some of our competitors, purely just based on our resource ounces. If we were a pure explorer with 670,000 ounces, we'd be higher value than what we are at the moment. We undervalued purely from a resource base in Kenya. The market's definitely not giving us credit for roughly about $20 million worth of infrastructure which exists. We were starting from scratch. We'd be having to invest a lot of money into that infrastructure. We've got it. It exists. So we're undervalued from that point of view. And our story to go from where we are now to this 24,000 ounces per annum is being refined every month, and we've got the right team in place to do it. So, as I said, I was on site over the weekend, and I've seen the plan. I've seen the ramp up from now, June, July, August, September, October, on how we get there. We've got to come out with additional information as it becomes available from the site and start to publish that, start to put some figures around our costs on the OPEX and the CAPEX on the larger heap leach. And once that's ready and the market starts to develop a better understanding of how we get there and that we are going to get there, I think the stock will re-rate tremendously. We're a penny stock, as I think all of us who are invested in this space know. These stocks can re-rate quickly. But we want consistency and steadiness in the share price. We don't want to go up and then go down and up and go down. So hopefully we re-rate quickly and then we're able to maintain it when the market understands our story. But as I said, if I was able to buy now, I would be buying.
Yeah. One final question, of course. You're obviously a mining man. You're steeped in the industry. You've got a big, long track record within the industry. You're not a commodities analyst, but I do have to ask you about the price of gold. The people you're talking to, what are you hearing about, and what are you preparing for in terms of the gold price? Do you have a view on where it's going?
We had a view before we did the transaction that it was going to go above 2,000 and stabilize there. It went up briefly and it's come down and it's kind of trading in this 1,800 to mid 1,900 range. we're gold bulls. We believe the price will go up. We don't believe it's going to run multiples of where it is now, but we certainly believe it's settling somewhere between the 2,000 and 2,500 mark. It's an inflation cushion. It's a safe haven when there are some unknowns. So yes, we're bullish on the gold price. We're very comfortable where it is at the current levels. We're making money, but we'd like it to go up, and we believe it will go up.
Yeah. Okay. That could also have an impact on the share price as well. Robbie, we'll leave it there, but thanks indeed for joining us. And we look forward to hearing more about what's going on there at Caracal Gold. That's Robbie McCrae, the Chief Executive.